Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. There is so much to discuss this time around, it is hard to find a point to begin with, but we're going to try our best with Shiraz Mian, who's our research director at Zacks, and stock analyst Tracy Reinick, and top market technician Kevin Matris. And you notice I was quick with the introductions this time around because there is a lot to talk about, starting with the stock market. People saying now, after they were like in a panic last week, 3 down days in the stock market, now they're saying, oh, calm down, things are getting better. What I want to know, Tracy, is are the worries of the market correction overblown?
I don't know if they're overblown. It was pretty brutal last week, I have to say, and it was in almost every sector that was selling off. It was indiscriminate, so that's kind of scary because we haven't seen indiscriminate selling for a long, long time.
Right.
But, it has to have a correction at some point. So we had one last week. It's rebounding as we tape this a little bit, here in this week. And who knows? Who knows where we're going to go? We have a lot of earnings still to come in. We have a lot of, economic news coming out this week and next week. Unemployment claims out again next week. So, I don't know.
Shiraz, on the topic of earnings, a lot of companies are beating estimates, yet selling off. So how much of this earnings betterment picture was baked in the cake already?
I think that's a fair way of saying that the earnings betterment picture was baked in the cake. Earnings have, by and large, been coming in line with expectations. We have had some really standout quality beats, Apple, IBM, Intel, and the like. I've personally been heartened by the positive news flow from the financial sector as well. So on the whole, the earnings picture was as the market was expecting. There's been a whole slew of news and stories that's been distracting the market in other directions, and that's basically been the cause for the weakness last week, and it's still in the background. We haven't really gotten rid of those worries and stories that kept us down last week.
Kevin, how much of this market's being driven by fundamentals, how much by technicals?
Really a little bit of both. When you look at the market last week, we came down only 4%, but as Tracy said, it was indiscriminate. Pretty much every sector got hit. Since we took out some important support at 10.5, I think we got as low as like 10.1. The support level right now is 10, that is psychological. Then if you break down through 10, you can see longer term support come in at right around 9,700, 98. Now, if you go all the way down there, that's another 4.5% lower from where we are today. And if you were to look at it, that would be almost a 10% correction from the highs that we had seen, literally no more than last week. So I think that until we can regain that 10.5 area, I think we may chop around for a bit.
Okay. So, Tracy, buying opportunity here?
Yes and no. I would be cautious.
You look for value in stocks.
I do. There's some value out there, but then there isn't. Like Shiraz says, Apple had great earnings. It's reaching all-time highs right now. I wouldn't exactly call that stock cheap. There's some value out there, but it's still hit or miss.
You've been pretty vocal on China lately in your commentaries as well. Is this an area for concern?
I think so. In fact, you could see that in some of the earnings that were out today. DuPont reported today, and they saw their fourth quarter sales in China, which includes Taiwan for them, up 70% over a year ago. And it was up something like 26% over 2007. And they said the whole Asia Pacific region was up 34%, which is way above pre-recession levels. And DuPont, they're a bellwether for where the economy is going. So this is good news, but you can see why China is saying to its banks, hey, we need to pull back on lending and other things, because these are incredible numbers coming out. And you can see it from Apple again. The Chinese sales of the iPhone took off. You saw it in a couple other small companies. Coach is saying double digit on retail sales also in China. Mm-hmm. These are good. This is what's helping us spur our recovery, but what happens as they start to slow things down more there? That's kind of the canary in the coal mine kind of thing out there. We don't know.
And today is the 26th of January, by the way, that when Tracy said today, if you're watching the calendar. Jobless claims reported last week surged to a 2-month high. What's up with that?
Well, we have been seeing this mishmash of data, some coming very favorable, some making us reassess our outlook for the economy, particularly the labor market. My personal sense is that we are on the mend in the labor market. We are near the point where we should start seeing positive job growth.
In this country?
Absolutely.
We're talking about the U.S.,
we are
right?
talking about the U.S. In fact, just
to be sure.
just on a little bit of a tangent on the China story, it's not just the basic materials and the consumer products and the tech. The whole commodity sector's boom and the secular growth story was very closely tied to China's growth, and historically, central banks and the Treasury's ability to slow down an economy it's a very difficult job. So it is something I would agree with Tracy's assessment. There is something to be concerned about, a major cloud on the horizon for the market.
All right.
On the whole.
I should not have laughed when I said that. It's a bit insensitive of me. I will acknowledge that and take the flak for it. We've got a better picture on consumer confidence at a 16-month high. We've got leading indicators pointing to a pickup in spring. Right. Are you guys buying that? Are you still all optimistic on the economic front, Kevin?
I mean, I'm optimistic. The most recent leading indicators report did show a bigger growth rate than we had expected. I think it was up 1.1% in December. But you are getting a mixed bag on some other areas. I mean, retail is gaining, but it's gaining at a slower pace. Manufacturing has been gaining, but the growth rate has slowed. Housing, you got good reports on housing, then you get bad reports on housing. So the takeaway is there indeed is a trend of improvement, but getting to this whole growth picture, yeah, GDP is going to come out this Friday. I think they're going to show 4.5%, but we're probably going to normalize to a more moderate 2% per annum.
4.5%, and then they're going to revise it to just a 1.5%
to zero, right.
growth rate.
But
right.
on a per annum rate, we're probably going to be finding ourselves for the next couple of years at a 2% growth rate in comparison to the more historical 3% growth rate, and that is what I think has some people worried. Since you have China pulling back on their stimulus, this is kind of a foreshadowing as to what potentially could be happening here in the U.S. and other countries if we start doing the same.
Tracy, optimistic yet on the economy?
Yeah, I'm more optimistic than I was a couple months ago because you are seeing in the chemical sector and some of the other building block sectors, real growth there.
Shiraz?
Yeah, I've never been a believer in the double dip theory. I all along thought that the economy should be able to start running on its own once the fiscal stimulus runs out. So yes, I have strong belief in the strength of the underlying commodity.
All right, that's the feeling from here. Hopefully we've covered the issues and trends that you had questions on with everyone here at the roundtable. I'm Terry Ruffalo.